Welcome to Realty Solutions, your go-to channel for all things real estate. In today's fascinating episode, we're going to dive headfirst into the captivating world of wealth building through rental properties. We'll unlock the secrets of financial freedom, which have been tightly clutched in the hands of successful investors for years. And hey, before we set sail on this voyage of discovery, make sure you're subscribed to our channel and have notifications turned on. You wouldn't want to miss out on the treasure trove of real estate tips and strategies we share regularly, would you? Now let's talk rental properties. It's a term that's been echoing in the hallways of investment for years. But what does it really mean? How does it work? And most importantly, how can it work for you? Whether you're an experienced investor or just starting your real estate journey, this video promises a wealth of insights to guide you toward financial independence. So let's get started. So, how do you build wealth through rental properties? The first step is choosing the right property. This may sound simple, but it's actually a sophisticated process that requires careful consideration and strategic thinking. The key here is to look at the big picture, not just the property itself, but also the overall market conditions, the local economy, and the neighborhood dynamics. The first thing you'll want to consider is location. This is a golden rule in real estate for a reason. A property in a desirable location will attract higher quality tenants and command higher rents. Think about the amenities in the area, the quality of local schools, the proximity to employment centers, and the overall quality of life. Next, you'll want to assess the rental demand in the area. A property might seem like a steal, but if there's low rental demand, you may struggle to fill your units, leading to costly vacancies. Look at vacancy rates, average rental prices, and the rental market's overall health. But it's not just about the here and now. You also need to consider the property's appreciation potential. In other words, how likely is it that the property's value will increase over time? Look for areas with strong growth prospects, such as those with planned infrastructure developments, population growth, or emerging industries. Finally, consider the property's cash flow prospects. This means looking at the potential rental income versus the property's ongoing expenses like mortgage payments, taxes, insurance, and maintenance. A property that can generate positive cash flow will contribute to your wealth from day one. In essence, strategic property selection is about finding a property that ticks all these boxes: a desirable location, strong rental demand, favorable appreciation potential, and positive cash flow prospects. Remember, every property is an investment, and like any investment, it should be chosen with care and diligence. So take your time, do your homework, and make sure you're making a strategic choice that aligns with your investment goals. Strategic property selection is the foundation of successful real estate investing. This is your first step towards building wealth through rental properties and unlocking your financial freedom. Next, let's talk about financing. The path to building wealth through rental properties isn't just a straight line. It's a journey with twists, turns, and a few financial hurdles to overcome. But don't worry, with smart financing, you can navigate these obstacles like a pro. So what exactly is smart financing? It's about exploring different financing options and choosing the one that best suits your investment goals. It's not a one-size-fits-all approach, but rather a tailored strategy designed to maximize your returns. Let's start with traditional mortgages. These are often the go-to choice for many investors. They offer a stable, long-term financing solution with relatively low interest rates. The downside? They often require a significant down payment and have stringent qualification criteria. But if you tick all the boxes, a traditional mortgage can be a great way to finance your rental property investments. Next on our list are private lenders. These can be individuals or companies willing to lend money for real estate investments. Private lenders can offer more flexibility than traditional banks, with quicker approval times and less stringent qualification criteria. However, they usually charge higher interest rates, so it's important to weigh the costs and benefits. Finally, we have creative financing strategies. These can include seller financing, lease options, or even crowdfunding. Creative financing can provide unique solutions for investors who might not qualify for traditional loans or who are looking for more flexible terms. They can be a game changer for investors willing to think outside the box. Remember, every financing option comes with its own set of pros and cons. Your job as an investor is to understand these, evaluate them against your financial goals, and choose the option that puts you on the path to wealth accumulation. Smart financing can significantly increase your returns and accelerate your wealth accumulation. It's the financial fuel that powers your wealth-building journey. So take your time, do your research, and make smart financing decisions that will help you build a lucrative rental property portfolio. Now, on to property management. Taking the leap into property investment is one thing, but ensuring your properties are managed efficiently is quite another. This is where effective property management comes into play. It forms the backbone of your rental property business, keeping it running smoothly and profitably. First off, let's talk about tenant screening. This is an essential part of property management. You want to ensure that the people living in your property will pay their rent on time, take care of the place, and not cause unnecessary problems. A thorough screening process can help you find reliable tenants who are likely to stick around for a while, reducing the turnover and vacancy rates. Next, we have maintenance. Maintenance isn't just about fixing things when they break. It's about regular inspections, preventative measures, and quick responses to tenant repair requests. By keeping your property in top shape, you not only increase its lifespan, but also maintain its value and appeal to prospective tenants. Then there's rent collection. It sounds simple enough, but it can become a headache if not handled properly. You need a system in place to ensure timely payments, deal with late fees, and handle any payment disputes that might arise. This is crucial for maintaining a steady cash flow and ensuring the financial health of your rental business. But property management isn't just about the day-to-day tasks. It's also about setting the right rental rates, understanding and complying with housing laws, and handling difficult situations like evictions. It's a multifaceted role that requires a good deal of knowledge and skills. So, whether you choose to manage your properties yourself or hire a professional property manager, make sure these tasks are being handled effectively. Remember, efficient property management doesn't just keep your properties occupied and in good shape. It also maximizes your profits and helps you build wealth in the long run. Remember, a well-managed property can significantly boost your bottom line. While rental income is important, don't overlook the power of long-term appreciation. The magic of real estate investing often lies in the realm of long-term appreciation. Choosing properties in areas poised for growth can significantly contribute to wealth accumulation over time. You see, as neighborhoods develop and demand increases, property values also tend to rise. This appreciation, though it might seem slow at first, can, over the years, substantially increase your asset's value, leading to a notable boost in your overall wealth. However, it's crucial to keep in mind that not all areas are created equal. Some might blossom rapidly, while others may take a more leisurely pace. That's why it's essential to do your homework and identify those areas that hold promising potential for growth. Look for neighborhoods with new infrastructure projects, thriving local economies, and positive population trends. These are usually reliable indicators of areas set for appreciation. But remember, as your wealth grows, it becomes increasingly important to protect it. And this is where portfolio diversification comes into play. By spreading your investments across different types of rental properties and even different regions, you can mitigate risk and create a safety net for your wealth. Think about it like this. If one property suffers a setback, the others in your portfolio can help offset that blow. Diversification can also open doors to new opportunities. Single-family homes, multi-unit complexes, commercial spaces, each comes with its own advantages and potential for returns. So, don't put all your eggs in one basket. Spread them out and you'll likely find that it leads to more stable and consistent growth. In conclusion, while rental income provides a steady cash flow, the real wealth-building power of real estate often lies in long-term appreciation and portfolio diversification. With a diverse portfolio and a long-term vision for growth, you can watch your wealth multiply over time. It's about looking beyond the immediate, seeing the potential in the horizon, and planning for a future where financial freedom is not just a dream, but a reality. With a diverse portfolio and a long-term vision for growth, you can watch your wealth multiply over time. Building wealth through rental properties isn't just about buying and renting out units. It's about strategic planning, effective management, and a long-term vision for success. Today, we've explored the roadmap to building wealth in this exciting arena. From selecting the right properties with strong rental demand and appreciation potential to smart financing and effective property management. Remember, the key to realizing your financial dreams lies in your hands. It's about leveraging different financing options, managing your properties efficiently, and keeping an eye on long-term appreciation. And as your wealth grows, don't forget to diversify. Spread your investments across different types of rental properties to mitigate risk and maximize returns. In the journey of wealth creation, every step counts. Every decision you make brings you closer to your goal of financial freedom. That's all for today's video. If you found this information valuable, be sure to give us a thumbs up, leave a comment, and don't forget to subscribe to Realty Solutions for more real estate insights and strategies. Until next time, happy investing.